Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, keep your eye out on the broader markets. Yes, the headline index is as flat as can be, but a few stocks they're moving around. Take a look at the intraday chart of CESC. Our ticker team as well is alerting you. That stock has gone through the roof, so I think you should pull up that stock. And even Strides. Now I think you should pull up the intraday chart of Strides. That's moving higher, and it's moving higher very, very well. So keep an eye out on that one as well. Spiked up to the high point of the day. In terms of the Nifty stocks, well, you should keep an eye out on a couple of these other names as well. Ultratech Cement, well, that's holding with a gain of around 1.5%. So from the front liners, a bit of a volume spike on that one. But how do you trade the Nifty? Ashwani Gujral and Rajat, both of them are with us. Ashwani, trade on the Nifty, and also the Nifty Bank is down a little more than 100 points. At some level, would you be looking to buy the Nifty Bank?
See, we had bought the Nifty Bank, but it's showing follow-through selling. So the sense seems to be that possibly, the markets are unable to move further on the upside, and some sort of correction may be setting in, starting with banking. Now, obviously, initially everything starts with a consolidation, and then things tend to come off. But given the vertical move that we had, the market is finding it difficult to breach on the upside. So with that, we are right now short on the Bank Nifty, because that's where the initial weakness is coming. But at some point, if this continues, even Hindustan Unilever is lower. Some large stocks are showing a bit of cracks. So that way, we are taking our initial steps towards the short side, and if it starts to work, we'll then add on. As far as stocks are concerned, DHFL is a sell with a stop of 670, target of 645. Tata Steel is a sell with a stop of 592, target of 570, and Apollo Tyres is a buy with a stop of 260, target of 274.
Okay. Those are the picks that Ashwani is going with. Rajat, what's your reading of today's slightly quiet day, and of course your ideas right now?
I would say today is a quiet day because we are sort of consolidating above 11,500, and till such time the Nifty falls below 11,500 to about 11,495 support area, I don't think the dip will be much. I mean, mostly the dips are likely to get bought, and I still believe that if we sustain above 11,500 today, then the Nifty would actually scale up to 11,650 rather than go down. And talking about the Bank Nifty, my reading is that my critical level is 28075. Till such time 28075 gets taken out, and the Nifty Bank at lower levels might again attract buying. And this is more of a consolidation. As of now, if you look at the Nifty 500, there is 85 stocks that are declining by 1%, and 100 stocks are moving up.
No, I think, oopsie. I think we'll get back to Rajat in just a bit, but we'll keep an eye out on those picks that he's already given us. By the way, just keep an eye out on a few of these stocks. I think you should pull up a few of these stocks in the broader markets that are moving pretty well. You pull up something like a Prism Cement, a Prism Johnson, it's what it's known as currently. The volumes have been very, very large there. On a day-to-day basis, we've been seeing large trades as well. Today as well, it's quite large. The stock is moving higher. It appears there is, some selling on a day-to-day basis. So we'll keep an eye out as and when those large trades get cleared out. So that's one stock I'm looking at. And Universal Cables as well. Now that's on the verge of hitting a 52-week high. So I think from the broader market, you should pull that stock as well up. It's moving higher as we speak. Rajat, we have got you back with us. If you could give us those picks that you were telling us so that our viewers don't miss out.
Yeah, I've got a couple of them. Cummins, I would put a buy with a stop loss below 732.90, and my targets would be 744 and 747. Colgate Palmolive buy with a stop below 1150, 1167 and 1171 are the two targets. Both these stocks are showing good enough momentum, so probably not an encore for CESC like, but they are likely to move up. That's it.
Okay, all right, Rajat and Ashwani, thank you very much for all the trading ideas. By the way, CESE is literally zooming higher. It's one stock that's quite stunning now, 8% of an up move. Remember, there's a demerger that the market is waiting for. And the last I heard the company, they were making an investor presentation back in Kolkata 2 weeks ago. The next requirement was to get a clearance from the West Bengal Electricity Board, the West Bengal Electricity Commission. So that was the next thing the company said, after which they can go forward with the demerger. Perhaps there's some indication that that's coming, or something that's definitely getting the market extremely excited about the stock, which will soon be trading as 4 separate entities. On that note, we'll just quickly head across to Europe and see how markets there are doing. They've opened out slightly calm and cautious. There you can see mild cuts coming in on the CAC. DAX and FTSE fairly flat at the moment. So Europe has not carried forward the momentum that we've seen across Asia. Straight away get to that promised exclusive conversation with Mr. Ajay Piramal, who is open to an acquisition of a big domestic pharma company, provided it comes at a reasonable price. His non-compete with Abbott expires in September. Here's more from this interesting conversation that Nisha Podar had with Mr. Piramal.
If we find that there are businesses that we can acquire which will have a long-term value creation potential and which we can get at a reasonable valuation, we will definitely do that. So we are examining it, but we have not come to any definite term potential in it.
And how much of your kitty would you set aside for any such inorganic growth in pharma?
So I don't think funding is a constraint, so it depends on the opportunity.
Right.
If we think it's worthwhile, then we will adequately fund it.
Mr. Piramal, you know it better than me that Indian pharma companies have been saddled by not just pricing pressure but also US FDA concerns. Some of them have succession issues as well, and management bandwidth is also lacking in some of them. Do you think that some of those big pharma companies or sizable pharma companies also, they will be also on your radar?
The gains and the advantages that Indian pharma in the export had for generic exports is no longer there. That's why if you look at our own strategy of pharma has always been to get niche, complex products for export. But for the simple generic oral solid dosage products, I think that market is highly competitive and not so profitable. So that's not something we are looking at. We would look at the domestic, and if there are even larger companies that want to exit out, I mean, we are open to that.
Okay. And what about the valuations currently? Even though the markets fell and the overall performance of the companies came down, a lot of investors say that in terms of valuations, the market capitalization of most of the pharma companies which are struggling is still on the higher level. What do you have to say about that?
Yeah, so rather than be, this is a very general statement, but yes, there are some valuations which are high. That's the challenge when we have to, when we are looking at acquiring. Unless and until we find that there is a reasonable valuation, or a valuation that we think in the long term we can create significant value, only then would we invest in.
You have looked at several assets, several OTC brands, but you have always found the valuations unattractive. How are they poised right?
So we have actually done acquisitions in OTC. We have not done the really mega acquisitions, but we have been growing OTC. What we're doing in OTC is actually what we did in the domestic market earlier. We are building on our sales, we are building on our distribution, so that we have the pipe ready for introducing new products, and we could introduce products either through our own development, which we are doing, or through acquisition of smaller products.
Okay, we're holding at around 11,560 odd, but the odds really at the end of last week was that the bulls will conquer the 11,500 mark. That's what's happened. Now the 11,500 put, the kind of addition we have seen in the last few trading sessions, that's telling you that the bulls believe, yes, we can defend the 11,500 put. And in fact, just a few trading sessions ago, the premium on the 11,500 put was around 120 rupees odd. So there's been a lot of writing at that level. And if someone is writing that strike currently, then in fact they're looking to defend the 11,450 odd mark, because they get 50 rupees as premium. So just keep that mark in mind. A lot of addition in the last few days. But let's get in a word from influential market watcher Arvind Sanger, the managing partner at Geosphere Capital Management, on what he thinks of the current market rally, as well as the key concerns for the Indian economy.
Notwithstanding modest weakening in the rupee and the political uncertainty before an election year, the economic fundamentals from a bottom-up standpoint are very solid. The mid-caps are also riding the wave of good economic fundamentals. So, again, the global risks notwithstanding, and I think the global risks, we have lived through some of the fears. Global trade war, that fear seems to be somewhat receding. It doesn't look like that's about to break out in a big way. And Fed rate hikes, I think the market's gotten used to the fact that the US Fed is on a steady rate improvement cycle, but is not looking to do anything dramatic that'll cause liquidity to dry up. If you look at the headwinds for the market, then the political uncertainty leading up to the elections, which for the Lok Sabha, which I guess could be held any time between later this year and May of next year, and then global cues on trade war and other things that could upset the apple cart. So those are things. But India specific, I think the two things to worry about are the elections and the rupee and the current account deficit. Some of the export-oriented, auto parts companies are certainly benefiting from a weaker rupee. The IT names obviously have been benefiting from weaker rupee, but the economic fundamentals domestically, there were some fears about what's going on in the CV market because of certain regulatory changes. But I think the CV market seems in good shape. I think the domestic auto market seems in good shape. Some of the banks, laggard banks like ICICI Bank, have been huge winners as people are getting past the concerns about the leadership issue and looking at the fact that economic fundamentals are improving, and the bad debt cycle, whether it's for some of the PSU banks or for some of the lagging private sector banks are behind us. So I think the financial sector, there are some of the laggards that look quite interesting in that space too. Some of the emerging themes, even things like real estate, which have lagged, that's where some of the values may lie because the cycles are just beginning.
Okay, that was Arvind Sanger. By the way, there's an interesting up move in the market. Let's get some stocks going. ICICI Bank is making a strong comeback. It was this stock, one of the prime reasons why things kind of sulking since morning. Grasim has seen massive buying. I think, Nigel, cement, your sector is the sector of the day because of the kind of commentary that we've heard, not from one, but two companies. You heard NCL Industries in this show. You heard India Cement sound so optimistic on demand, on the price outlook. And I think some of these cement stocks are really taking off.
I would want to see the EBITDA per ton improve. Cement demand improving, the volumes improving is absolutely fantastic news for the economy. But I would like that to translate into the EBITDA per ton, which is very, very important. And a couple of brokerages, they're making a very valid point. They're saying the capacity addition has slowed down drastically. And because the addition is slowing down, then in fact, if demand moves up, then you'll see that capacity utilization levels will go up. So lower capacity addition could be a positive as well. On Grasim, just a quick point out there, those numbers look good. Grasim, remember, now is more of a VSF play and it's more for holding company. So it holds stake in Ultratech Cement from where bulk of its, its profitability comes. But the stock post its numbers saw some mild profit booking, and from there, it's had a good run. So good going.
Equity markets are stirring back to life. We've mentioned ICICI Bank, Grasim, Ultratech. It's a big cement day. There's no denying that. But right now, let's move on to commodities and see what's happening in that part of the world. Manisha Gupta is joining in with all the action. Hi, Manisha.
Thank you so much for that, Surbi. Actually, that is the case with all asset classes, not just equities, but currencies are doing well because the US dollar has declined 0.5% overnight and continues to be on the negative side in the Asian and European markets as well. And we have seen that impact come in for the commodities space as well. So almost every sector in commodities, the non-agro space, is doing positive. So whether it's energy or the industrial metals, even the precious metals are trading in the positive. Would want to talk about the industrial metals because we have seen gains continue for a second straight day onto that one. Remember, the Shanghai steel prices, both the varieties are trading at multi-year highs, record highs in case of hot steel oil. And we also have seen the copper prices jump up back. Remember, copper prices were trading at a one-year lows in the previous week, but we have seen strong gains come back onto that one. Aluminum is trading at a one-week highs, and we have seen the steel ingredients like nickel and zinc also come back. So apart from the weakness in US dollar, it is about the US and China talks in this week. It is also about China curbing output because of the pollution concerns. And of course, there is unwinding of short positions in the metal space. So there are many factors which really seem to be supporting the sector right now. Sumit Bagadia now joins us to talk more about that. Sumit, hi, good to have you. What is your sense? Is the upside that we have seen in many of these industrial metals sustainable, or is it going to be a sell on all of these upticks?
Hi, Manisha. Good afternoon. Well, I think we should take this as a bounce back or a pullback in most of the industrial metals. Especially at present, we are seeing a good bounce back in zinc, copper, nickel. I think for a trading perspective, one can initiate long positions in the zinc August contract at the current market price, that is 169 and 170 levels, with a small stop loss to be placed at 167.70 levels on lower side for the pullback or bounce back till 173 or 175 levels in next couple of days.
How are you looking at the gold prices? Because quite a bit of a comeback from the kind of lows that we saw in the previous week. Are you comfortable buying these levels? Do you see 1200 come back in case of charts?
Well, see, as a pullback trade, yes, we can initiate long positions. COMEX gold is currently quoting at around 1196. I think in a pullback move, we can see move till $12.10 or $12.15. So if we see such pullback in COMEX, then there is a possibility that we might see good jump in Indian gold too. I think for a trading perspective for next 2 to 3 days time horizon, one can initiate long positions in the gold October contract at around 29,550, 29,560 levels, which is the current market price, with a stop loss to be placed at 29,430 levels on lower side. And on higher side, we can see levels of around 29,750 and 29,800 levels in next 2 to 3 days time horizon.
Before we let you go, Sumit, how are you looking at the crude oil prices? Because we started the day positive, but we haven't been able to hold on to those kind of levels. Consolidation at its best. We haven't seen a lot of movement here, but at these current levels, what direction are you taking?
Well, see, Manisha, charts are saying that crude is still weak. Till the time we don't see a decent recovery or decent pullback in the crude prices, it's better to be on sell side. I think Amex crude has resistance at around $68 or $70. So till the time these levels are not taken away, any bounce back in crude should be used as selling opportunity for next couple of days. So for a trading perspective, one can initiate sell positions in the crude September contract at around 4580 or 4600 levels, with a stop loss to be placed at 4670 on higher side, with a downside target of 4500. And if 4500 is taken away, then we can see a fall till 4460 levels in next couple of days.
Okay, all right. Thanks so much, Manisha, as well as Sumit, for joining in and filling us in with those commodity trades. By the way, the reason that the markets are moving higher is ICICI Bank. That's really the big stock in there. That's moved higher, and that's taken the Nifty with it. You have a couple of these cement names as well that are participating. But ICICI Bank, that's got a large chunk on the index, and when that moves, it really moves the index. And from the broader markets, I think IDFC should come up for you. The intraday chart should come up for you. That was trading in the red when we started off the show. Now it's moved into the green. Well, we'll